The Fed spoke today, which generally, anymore, that's never a fun thing. That's always bad. How bad? I don't know. Let's ask Carol. Here's what the Fed chairman had to say.
Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate.
Okay, Carol, obviously this is Carol Roth. She wrote the incredible book, The War on Small Business, Recovering Investment Banker. Everyone knows Carol Roth by now. Carol, break this down in words that are, English. We increased the rate by 25 basis points. What is this supposed to mean to me as just a normal person?
Well, I think the first thing that everyone should take away is the insanity that instead of the economy running in normal cycles, we have these handful of people who are playing God with the economy. They've been rigging Wall Street at the expense of Main Street. It's completely insane. And now they're deciding, from meeting to meeting, how much they are increasing their target rate, which is a rate that banks are supposed to be lending to each other at, which really flows through the rest of the economy. It helps to set rates on things like mortgages and car loans and things like that. But the bigger issue isn't really the size of the hike or, how many we have or when they pause and all these things that everybody's obsessed over. The bigger issue is that they are trying to destroy demand when we are facing supply constrained issues. So they're putting out policy trying to make us stop spending and businesses stop spending and government stop spending instead of increasing the supply of energy or the supply of homes or the supply of labors, which would be done not through the Fed, but through other fiscal policy. And the reality is that none of the people who they're trying to destroy demand for really are playing along. We know that the government isn't cutting spending and has no plans to do so anytime soon. Businesses, they have been cutting some of their costs a little bit, but they've been also trying to pass on price hikes to consumers. Consumers have been hanging in and eating into their personal wealth. So I think that's really the bigger issue is that we have, all of these people who are coming in and instead of letting the free markets do what they should do and sort things out, are putting their thumb on the scale, and it always ends up working out better for the wealthy and well-connected. Go figure, Jesse.
What a shock. The wealthy and well-connected are the ones making the decisions. It always seems to work out well for them. I'm stunned. Carol, let's rewind back to some basic stuff for you, but I'm stupid, so I need you to explain it. Why are the banks loaning to each other? Doesn't this bank have all the money and this bank has all the money? They're loaning to each other? I don't understand.
Yeah, these are overnight rates. And this is going to get really wonky because there are all of these rules in place that they've put aside. But the theory is that they have to keep a certain amount of reserves with the Federal Reserve. And to do that, if they don't have enough money one day, they're going to loan to each other. So it's like a whole insane banking system sort of scenario. But I guess the point is that the banks could be setting those rates in a free market scenario themselves. They don't really need the Fed to tell them what those rates are. And it's just another one of these quote unquote tools, which means opportunities for central planners to come in and tip the scales in favor of whatever it is that they're trying to accomplish, which as we just covered, is never in favor of you or me or the average American.
All right, Carol, the debt ceiling fight. What is this? Does this have anything to do with the economy? Everyone knows they're going to raise the freaking debt ceiling again. They're not going to cut any significant amount of spending. This is the least dramatic drama I've ever seen in my entire life. But what does any of this mean to me?
Well, as Congress is a place where they perform political theater and legally launder money, this whole scenario gives them an opportunity to get into both of those. As you noted, in the short term, we are not going to default on our debts. The reality is that there are plenty of other ways they could lease out some of the things that they own. They could sell off assets, other things to pay for debt payments should they have to do it. But the bigger issue, and this is why this is so frustrating, is the debt ceiling's a fight over how we're financing previous overspending. It is not addressing the overspending. So you're looking at, something going on the freak show, on the side of the circus instead of what's happening at the main event. And the reality is, if we don't stop spending, it's just going to be an issue. And tying this back to what we just talked about with the Fed, the Fed holding down interest rates let the government rack up debt and not have to pay, very much on that debt at all. As these rates are going up, it's becoming more and more expensive. It's time for the government to go, okay, it's our turn now. And we understand that we got away with some stuff, but we should be changing course here because the current trajectory we're on is unsustainable. But of course, there's nothing that looks like fiscal responsibility. And unfortunately, when the GOP gets involved, there's only posturing. There's no actual real action. So it's a really big issue and challenge. And at the end of the day, it's only going to impact our purchasing power and our ability to have the same quality of life going forward that we've had in the past.
Carol, you're right. Republicans love to spout this line about spending as soon as Democrats take over, but they do the same thing. Okay, so Democrats aren't going to stop spending, and Republicans aren't going to stop spending, even though they'll lie about it. So we're driving off the cliff. I mean, you say
Right.
Unsustainable. It ain't going to be sustained. We're going to go off the cliff. What does that mean?
That's a good question. There are lots of people who are sort of pontificating about what, the next sort of financial world order or financial reset looks like. Certainly, it's not going to allow the U.S. to be the same power center that it is, whether that means new blocks align, or some other country potentially emerges as a power. At the end of the day, it just means that we're going to have less ability to purchase things with our dollars, and we're going to have a lower quality of life. We may have less access to critical things that we need in our lives, whether that be medicines or foods or whatever. I mean, it really takes us out of that pole position of helping to drive the world economy. And the benefit of doing that is making our lives better. So it is not a good development. And, the problem with the driving off the cliff, if you've watched any of the Wile E. Coyote cartoons in the past, is that you just don't know where that is. So you just keep going and go, oh, I've got space. But once you're over that edge, the coyote drops down, and then that becomes the problem. And, without somebody showing some level of restraint, because I do think this is fixable, but without showing some level of restraint, if it continues on this trajectory, we're talking about things like they're projecting over the next several decades, $60 trillion just in interest expense on the debt. That's 3 times the current GDP. The only way that happens is everything gets inflated so much that your dollar becomes worthless. And as I'm fond of saying, and may or may not be related to things I'm writing about, they're projecting it. You will own nothing.
Oof. Carol Roth, appreciate you very much. Come back.
You as well.